me welcome Sandeep Raina in on this conversation. Sandeep, thanks so much for joining us. Even as we speak, we have flashes indicating that the auto passenger car companies have started increasing prices coming into effect from the 1st of August. My first question to you is that how is core business looking? Because the demand has been slow to pick up. At the end of the day, for auto ancillary companies, how is the core demand looking?
See, if I talk about auto and auto ancillaries, demand for auto actually I will divide into different parts. So you have a passenger vehicle, you have a two-wheeler, you have a MHCV. Now, two-wheelers are not doing well, and we believe it will take some time for us to basically see good traction on that side. Although export in two will do well, but domestic market I don't think so will be doing well. Now talking about the passenger vehicle, yes, they have been growing at 5% now if you take the data for last 9 months. And Maruti is the lead guy with the 13% actual growth. But we believe this growth will be more or less there. Now coming to the MHCV part, actually that's a big surprise. If I just look at the data long back, from 100, let's say they were doing 100 rupees sale, they had come down to 60 odd percent because there was a drop of 40 odd percent. Now in last 1 year, they have grown at 20 odd percent. So they are still 30% from the peak, but they are at least doing well. Now the reason broadly can be the the mining ban that was lifted. So if you see the freight utilization, actually also the truck utilization has increased, which was at 60% like a year back. They are now 67 to 68%, even higher. So this is the scenario right now which is playing in the entire market. Now your tire market also, if you see, it's not doing well in terms of revenue. So revenues are not increasing, but as your reporter also rightly said, the cost has come down significantly. So be it your crude, be it your rubber prices, be it your carbon black price, all are dropping. So this has led to actually a margin increase, but revenue increase is still not there. That is what is happening right now in the industry.
Right. Let's talk about the rubber stocks as such, the tire stocks, I beg your pardon. Rubber prices have held them. What's the prognosis from here, Sandeep? Because they've had the tailwind of the rubber prices coming down and better profitability. Of course, MRF comes out with numbers today, but I know you don't want to talk about specific tire companies. But on the whole, do you see a sharp improvement because they have the double benefits of lower raw material costs and a pickup of demand going forward?
I'll tell you. Okay, if I just talk about the tire industry, the biggest is your replacement demand, which is around 70 odd percent. So 30% only comes from the OEM. So the OEM growth, which was earlier like 5% in PV and others, that will keep on. So there will be incremental 1 or 2% growth from that side. How the biggest worry is the 70% replacement, which actually is out of that 70, also 46% is your MHCV demand. So MHCV actually in last 2 years has not done well. So the replacement demand from that side will also not be there. So in totality, I won't be too positive on the growth side on the tire industry. Maybe 5 to 6% growth, we should be happy about it. But yes, on the raw material side, I think raw material side will be subdued. It won't be increasing like your rubber prices and your carbon black. Although in Q1 we saw a bit of increase in your carbon black prices. But our sense is it will be in the range, and the margins which the companies are making right now will be sustainable margins, but growth will not be more than 4 to 5% on the volume side.
Let's move to the battery side. Bosch is doing very well. It's a nifty stock now, and it's one of the gainers in today's market. Bosch and Amara Raja have given returns of about 75 to 77% over the year. But Exide has been an underperformer. What is your outlook on batteries as such?
Okay, see, Bosch is not a battery guy, is more of a fuel injection system. So that is a different ball game altogether. The company actually is a black box technology company, what we say. The company kind of products that they make, nobody else can make. So all your OEMs have to depend on that product. If you see the ROCs are close to 100 odd percent. So that company is altogether a different ball game. And so now talking to battery, since the questions were battery. See, battery company again, if you talk about Amara Raja and Exide, Amara Raja has taken a lead altogether in last 4-5 years. It has taken the market share, it has eaten the entire replacement market, and then the OEM market also it is cracking right now. So if I just talk about the product quality also, and if we speak to a lot of dealers also, they are very happy about the Amara Raja product, and they want to actually push this product because of the policies, because of the product. So everything put together. So, and overall, if I just talk about the demand of battery, I think it will be more or less linked with your OEM, which is growing at 5 to 6%, and also a little of your replacement. So Amar Raja, yes, clearly is the winner right now, and I think we also believe that going forward also we'll be betting more on Amar Raja than on Excite.
Okay. Let's look at auto ancillary as we know it. A great point on Bosch. I don't know why we put it together with battery, because it's a far bigger company than that. But I am going to talk about some of the outstanding performers. You have Igrasahi Motors, which is up 248% over the year. You have JMT Auto, which is up 239%. But there are lots of interesting stocks in this midst. You have, of course, Motherson Sumi, Amtech, Shanti Gears. What do you like in this space, Sandeep, for the next wave of upswing?
Okay, see, the company you mentioned, Shanti Gears and MTech, I would not like to comment on that since we don't understand those businesses. But talking about, see, auto ancillary space, I'll just tell you what would have happened, what has actually happened in auto ancillary space. See, if we go back, let's say like 7, 8, 10 years back, auto ancillary was just an ancillary company doing work for your auto component company. So there was no say for this company, and if you would see the margin profile or the kind of ROC these were working, they were not great. However, there is a one set of companies which are actually pioneered in auto ancillaries. The OEMs actually have to be fully dependent on them, and actually they cannot move an inch without them. So those companies actually categorize in black box technology, what we said specifically for Bosch. Now talking about these companies, these are companies like Bosch, these are companies like your Bharat Forge, Motherson Sumi. These are different kind of categories of company which actually has gone, the scale is so high. Like just to give an example of Motherson Sumi, although through acquisition whatever, it's like 35,000 crores business right now, doing ROC close to 50 odd %. So kind of technology they have, the kind of scale they have, so OEM wants something, they actually discuss with them, they get their product done from them. Just to give an example, for your Motherson Sumi, it has a $4 billion right now, the order book. He knows that how will he grow going forward. So 25% CAGR is very simple for him. They know they'll grow at 25 odd %. So that is a kind of technology and the kind of scale these guys have developed. Let's say for your Bharat Forge also. Now he's 60% of the market in crankshaft, which is auto component again, and 40% in Europe. So these are the kind of scale and the kind of product he's making, nobody else is making. That's why he has garnered that kind of market share. Also, if I talk about the ROC, they are 30-35% plus ROC. Although these stocks are expensive, but the kind of work they are doing, the kind of business they are doing with them, it's exceptional, and that's why they are growing like that. And we foresee these companies will keep on doing very well going forward.
Right, Sandeep. So a good prognosis on a lot of these companies. You're absolutely right. The business models have changed completely from just being suppliers to OEMs to becoming far more. They've got global footprints and they are expanding into new arenas. Sandeep, great having you on the show. Thanks so much for joining us with your take on the auto ancillary space. We head into a short break, but up next, the focus is on the P-note debate and the fears that seem to have cropped up again around that after the SIT report. We get you an exclusive